Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera. Pada sidang akhbar ini, Bank Negara Malaysia bersama dengan Jabatan Perangkaan Malaysia akan menyampaikan taklimat mengenai prestasi ekonomi negara pada suku ketiga tahun 2021 dan juga perkembangan moneteri dan kewangan. So please allow me to continue the presentation in English. In the third quarter of 2021, global economic recovery continued as higher vaccination rates and better health outcomes allowed containment measures to be relaxed. Growth was supported by domestic demand as labour market conditions improved. Trade in goods continued to support global growth. Most regional economies saw continued strength in their exports of goods, especially among commodity producers. While global demand continues to recover, manufacturing activity moderated during the quarter due to tighter supply conditions amid material shortages and logistical bottlenecks. Let me now hand over the presentation to Datuk Sri Dr. Uze to announce Malaysia's GDP performance in the third quarter this year.
Assalamualaikum warahmatullahi wabarakatuh. Good morning. Thank you, Governor, ladies and gentlemen. Thank you very much for having me for this session. In the third quarter of 2021, the Malaysian economy contracted by 4.5%. This reflected the impact from strict containment measure in July, weighing on consumption and investment activity. This more than offset the continued expansion in public sector consumption spending. However, monthly GDP estimates show that the impact of containment measure taper as restrictions were eased in a phased manner throughout the quarter. On the external front, net export contracted as growth in import outpaced the growth in export. On a seasonally adjusted quarter-on-quarterly basis, GDP declined by 3.6%. On the supply side, all sectors experienced slower economic activity in the third quarter. The manufacturing sector contracted marginally due to continued implementation of strict containment measures in July in most states, restricting activities to essential and global value chains. The phased lockdowns during the quarter have also affected the services sector, especially the consumer-related activities. For the construction sector, activities were constrained by operating capacity limit imposed under the various phases of National Recovery Plan. In the mining sector, production of both crude oil and natural gas were lower during the quarter, attributed mainly to several facilities closures for maintenance purposes. The agriculture sector declined further, driven mainly by weak oil palm production as harvesting activity was affected by prolonged labor shortage. On the demand side, growth was weighed by contraction in private consumption and investment activities. Private consumption declined as movement restriction had impacted spending in both necessity and discretionary items during the quarter. However, various policy measures, including the APF ICNAR and ICITRA withdrawal, as well as Bantuan Khas COVID-19 BKC, continue to provide support to households. Similarly, private investment declined as firm limited operating capacity had affected the realization of investment projects, particularly for structured investment. Public investment contracted due to lower capital spending by both general government and public corporation. Meanwhile, public consumption expanded at more moderate pace, contributed by slower growth in emolument and remain robust growth in health-related supply and services. For net export, while both export and import growth moderated, the pace of import growth was moderated following the continuing expansion in intermediate import and a positive turnaround in capital import. The current account of balance of payment narrowed to RM 11.6 billion or 3.1% of GDP during the quarter. The goods surplus increased to RM 41.2 billion, driven by export growth in both manufactured goods and commodities amid higher global commodity prices. Meanwhile, the services account deficit was broadly sustained at RM 50.2 billion amid a slightly improved performance in transport, construction, and other business services component. The deficit in the primary and secondary income account widened due to weaker investment income generated from overseas and lower settlement from abroad. Financial account in this quarter turned around to register a net inflow contributed by higher investment from foreign investor precisely in equity and investment fund share. During this quarter, this was driven mainly by higher reinvested earning and equity injection and channel mainly into manufacturing sector and financial services subsector. The labor force situation improved marginally as business and the people slowly readjust to ever-changing paces of the National Recovery Plan during the quarter. The number employed person continued to increase at slower pace of 1.2% to 50.28 million person. Accordingly, the employment to population ratio during the quarter stood at 65.1%. As compared to the period of recovery MCO, during the same quarter last year, the number of unemployment went up by 0.2%, resulting in addition of 1.2 thousand unemployed person to record 746.2 thousand. Thus, the unemployment rate in the quarter remained high at 4.7% compared to the average of 3.3% before the pandemic. On a monthly basis, the labor force situation is gradually improving, as reflected by decline of unemployment rate from 4.8% in July to 4.6% in August and subsequently to 4.5% in September. Headline inflation increased 2.2% in third quarter 2021, while core inflation increased 0.7%. September inflation went up 2.2% as compared to a year ago. The third quarter inflation was mainly driven by increase in transport, food, non-alcoholic beverages, and housing, water, electricity, gas, and other fuel. These three groups contributed 67.9% of overall CPI weight. The increase in the transport group was due to the base effect last year due to the setting up of the RON 95 petrol ceiling price to RM 2 ringgit 0.05 per liter starting March 2021 as compared to RM 1 ringgit 68 in quarter 3 2022. The increase for food and non-alcoholic beverages was recorded by oil and fat, followed by fish and seafood, meat. Then the increase in oil and fat was mainly due to the increase in cooking oil price as compared to a year ago. However, effective 1st August 2021, the government has set the maximum retail price for pure palm oil cooking oil in bottle packaging 1 kg RM 6.60, 2 kg RM 12.70, 3 kg RM 18.70, and 5 kg RM 29.70. With that, I end my presentation. Thank you. Let me now hand over the presentation back to Domino.
Thank you, Dr. Rose. Allow me now to share some insights on the outlook for the economy. For 2021, the Malaysian economy remains on track to achieve the projected growth rate of 3 to 4%. Looking ahead, growth is projected to improve further to 5.5% to 6.5% in 2022. The projections are premised on the following factors. Firstly, the gradual easing on containment measures will further support the resumption in economic activities. Second, continued recovery in the labour market as economic activity improves. Third, a pickup in production and construction activities driven by selected key projects. Fourth, continued policy support. And fifth, further growth in exports underpinned by strong external demand. Continued improvements in the labour market will be key to support the recovery going forward. Based on the latest indicators, conditions have been improving since the trough in July 2021 amid the gradual lifting of movement restrictions. For the third quarter as a whole, employment levels rose by 67,500 persons compared to a decline of about 29,200 persons in the previous quarter, while the unemployment rate improved slightly to 4.7%. Data from SOCSO also showed slight improvement in jobless claims and placement rates in August, which continued further in October after a temporary dip in September. Going into 2022, we expect a continued moderate recovery in the labour market. This is in line with Malaysia's high vaccination rate and progressive lifting of containment measures, which would facilitate a gradual resumption of economic activity. There remains, however, slack in the labour market following elevated underemployment and increase in the population outside of the labour force. Normalization in operating conditions would also allow for an acceleration in production activities and further progress in major infrastructure projects. Growth will be lifted by the operationalization of the Petronas floating liquefied natural gas dual facility that can produce 1.5 million tons of LNG per year, digital infrastructure investments under the Jendela initiative with expected total investment of 21 billion ringgit, and continued implementation of large infrastructure projects such as the Pan-Borneo Highways, LRT3, and the Johor-Singapore Rapid Transit System. In addition, policy measures for households and businesses remain available and will lend further support to growth. This includes cash transfers as well as funds and schemes by the government and Bank Negara Malaysia, as announced during the recent 2022 budget and previous policy packages. Malaysia's gross export growth was supported by a broad-based expansion across products and the relaxation in operating capacity restrictions. Strong global growth, particularly from Malaysia's major trade partners, is expected to support Malaysia's export for the rest of the year and in 2022. Malaysia continues to benefit from robust global demand for semiconductors to cater for work-from-home equipment, digitalisation of businesses, and medical devices. The strength in demand for non-E&E manufactured products and higher commodity prices will also provide impetus to Malaysia's export growth. While there are concerns on supply chain disruptions affecting the global recovery, the impact on Malaysia has been manageable thus far. This is reflected in the exports performance that is underpinned by our diversified exports across markets and products, as well as our key position in the global value chain. Our industrial insights also suggest that Malaysian firms are taking proactive mitigation measures to minimize the impact and risk from these disruptions. Notwithstanding the tailwinds, uncertainties surrounding the near-term growth outlook remain. Prospects are highly dependent on developments surrounding COVID-19. The global health landscape will continue to be shaped by developments surrounding the emergence of variants of concerns, the progress and efficacy of vaccinations, as well as responses to contain outbreaks. This also has implications on global supply chains and financial markets. Developments surrounding these external factors could weigh on the recovery in global demand, posing downside risks to the strength of Malaysia's external sector. Closer to home, it is important for us to remain effective, preemptive, risk-based intervention to manage COVID-19 transmission. Together, everyone needs to play their role to ensure SOP compliance. This will be key for Malaysia to secure an entrenched and sustainable economic recovery. On the upside, greater policy certainty and the faster progress of key infrastructure projects would provide a lift to growth. Headline inflation moderated to 2.2% in the third quarter. This was due mainly to the dissipating base effect from fuel prices. The implementation of electricity bill discounts from July to September further contributed to the decline. Core inflation remained unchanged at 0.7%. For 2021, headline inflation is expected to average between 2 to 3%, while core inflation is expected to average below 1%. Moving into 2022, headline inflation is projected to remain moderate. As economic activity normalizes, core inflation is expected to edge upwards but remain benign. This is given the continued spare capacity and slack in the labor market. The outlook continues to be subject to global commodity price developments and some risks from prolonged supply-related disruptions. The overnight policy rate was maintained at 1.75% at the recent November MPC meeting. Monetary policy will remain accommodative to provide support to the economy while ensuring inflationary expectations are well anchored. Fiscal and financial measures will continue to cushion the economic impact on businesses and households and lend support to economic activity. Given the uncertainties surrounding the pandemic and the impact to growth and inflation outlook, the monetary policy stance will continue to be determined by new data and information. The MPC will be mindful of a premature withdrawal of policy support and will continue to closely monitor signs of a more entrenched recovery in an environment of price stability. The bank also remains vigilant against a build-up of financial imbalances. During the third quarter, domestic financial market conditions were affected by uncertainties surrounding the global growth outlook and global liquidity adjustments. In particular, expectations that the US Federal Reserve would start tapering its asset purchase program by the end of the year led to an increase in US Treasury yields and a broad strengthening of the US dollar. As a result, bond yields increased in most other advanced and regional economies, including Malaysia. Despite these spillovers, the broader impact to the domestic economy is expected to be manageable. Since 1st October, the ringgit has appreciated against the US dollar amid the improved domestic economic outlook and higher commodity prices. The KLCI, however, has declined marginally as market participants continue to incorporate the impact of key announcements from Budget 2022. Going forward, as uncertainties regarding global liquidity adjustments and developments surrounding the path of the pandemic remain, financial and foreign exchange markets are expected to be subject to periodic bouts of volatility. Net financing expanded by 3.9% as at the end of the third quarter, reflecting lower growth in both outstanding loans and outstanding corporate bonds. For the business segment, outstanding loan growth increased to 2.4%, supported by higher growth in working capital loans. Loan disbursements for working capital remain high and continued to be supportive of economic activity. Outstanding household loan growth moderated to 3.2% as at the end of the third quarter. The lower growth was largely due to the containment measures and some base effects from the earlier rebound in loan growth in the third quarter last year. Nonetheless, our credit flow to the households trended upwards following the gradual relaxation of movement restrictions. This was reflected in a steady rise in loan disbursements amid higher loan applications in August and September. Outstanding financing to SMEs expanded by 3.2% as at end September 2021, as higher growth in repayments outpaced that of disbursements during the quarter, following the transition to a more targeted repayment assistance. SMEs that are able to service their loans are doing so and continue to have access to financing from banks. Disbursements year to date are higher than the levels in 2020. Disbursements picked up in September amid the gradual reopening by states. This was particularly evident in the acceleration in disbursements for working capital purposes, while investment-related financing also recovered. The banking system remains well positioned to support household and business needs as the economy recovers. This is supported by healthy liquidity and capital buffers to absorb credit losses and preserve the lending capacity of banks. Banks also continue to maintain prudent provisioning practices to account for higher credit risks, including risks from loans under repayment assistance. Since the onset of the pandemic, the government and the financial industry have continued to prioritize policy support and assistance to the SMEs. As you can see from this chart, measures for SMEs have been extensive and wide-ranging to cushion the economic impact of the pandemic and now to support and entrench business recovery. This ranges from ensuring continued access to financing to numerous facilities and soft loans, equity-based and blended financing schemes. We also have financial relief through the various fiscal measures, for example, wage and other subsidies and tax incentives, and repayment assistance to SME borrowers, to initiatives to increase digitalisation, modernization, and upscaling of SMEs, including offerings of digital business solutions by banks. SMEs are also well supported by debt advisory and resolution arrangements, business capacity building programs, and one-stop SME assistance centers, including the SME Corp My Assist online portal that was introduced in June 2021. Under the budget 2022, the bank will continue to supplement bank financing to SMEs, especially in new growth areas or key development strategies moving forward. We have allocated a total additional support of 4.5 billion ringgit under our fund to SMEs. Firstly, Bank Negara Malaysia will establish a 1 billion ringgit business recapitalisation facility. Under this facility, the FIs particularly may offer equity financing combined with debt. The blended equity financing scheme would help SMEs finance their businesses without excessively increasing debt burden. Second, Bank Negara Malaysia will set up a 1 billion low carbon transition facility, a matching fund that will support financing for SMEs to transition to low carbon practices. For example, SMEs may borrow funds to increase the use of sustainable raw materials and renewable energy. This may help businesses meet global requirements such as the EU Carbon Border Adjustment Mechanism in 2023. Lastly, we are increasing the allocation of existing facilities by 2.5 billion ringgit. So with this development, the overall allocation on the funds under Bank Negara stands at 31.1 billion ringgit, with a balance of about 11.1 billion available for SMEs to utilize. Beyond the more immediate outlook, Malaysia must further embrace structural reforms to foster dynamism, seize emerging growth opportunities, and secure a more durable post-pandemic economic recovery. Foremost are reforms to attract quality investment, build innovation capacity, enhance economic complexity, and strengthen social protection. Effective implementation, supported by robust monitoring and evaluation mechanism, will be key to ensure that the desired outcomes can be achieved successfully. Of note, two emerging growth themes are sustainability and digitalization. To this end, the 12 Malaysian Plan and Budget 2020 have already outlined some initiatives for Malaysia to latch on to these growth areas. To accelerate green growth and more climate conscious practices towards a carbon neutral country as early as 2050, key initiatives include the voluntary carbon market, the low carbon transition facility, and studies on introducing carbon pricing, including carbon tax and emission trading scheme. To enhance digital connectivity and adoption efforts, key initiatives include the implementation of Plan Jendela, which is the Plan Jalinan Digital Negara, enhancement of the SME Digitalisation Grant Scheme, and streamlining digital governance via the National Digital Economy and the 4IR Council. These initiatives will help position Malaysia as a leading player in a global supply chain for complex and high value-added products and services. This will also enable Malaysia to improve the standard of living of the rakyat and achieve balance and sustainable growth. Let me now conclude the briefing. The reimposition of containment measures weighed on economic activity, leading to negative GDP growth in the third quarter this year. But recent high-frequency indicators suggest a more positive momentum in economic activity. As such, growth is expected to improve in the fourth quarter this year, in line with further easing of containment measures and strong external demand conditions. Going into 2022, growth is projected to accelerate, supported by a resumption in economic activity amid a higher vaccination rate, continued policy support, and strength of external demand. However, the growth outlook remains subject to COVID-19 risk factors globally and domestically, stability in global financial markets, and gradual easing of supply chain disruptions. Critically, Malaysia must further accelerate structural reforms to secure a durable economic recovery. So let me now proceed to take questions from the media. Thank you. Thank you for all your questions. Inshallah, then the next time I'll be seeing you will be sometime next year. In January next year, we will be organizing the second My FinTech Week from the 24th to the 28th of January. And more information can be found on the website myfintechweek.my as highlighted on the screen. And during My FinTech Week, we will take the opportunity to also unveil our third financial sector blueprint that will span over 2022 to 2026. And this is one of our flagship publications that will describe the financial industry landscape for the next 5 years. So let me now leave you with a short video of what you can expect from the week. So until then, stay safe.